What's going on, guys? We have two fabulous REITs we're going to be taking a look at today. This is a great way to earn passive income by getting to own real estate investment trusts. Now, REITs, they by law are forced to pay out high dividends to us shareholders in order to keep that advantageous tax filing status. The two stocks we're taking a look at today are Realty Income, not Reality, and VICI Properties. They now both offer a starting yield of over 5%. Real estate has created more millionaires than any other wealth class. Real estate is such a powerful tool because it tends to appreciate over time. Land becomes more valuable as we're not just building more of it. Crypto real estate, that doesn't count. Real estate is a chance to produce income each month in monthly rent checks. It's a chance to get diversification from the stock market. It's used as an inflation hedge. Both real estate prices and rental income can rise with inflation. Real estate can also be bought using leveraged money, such as from a bank. And there's tremendous tax benefits to owning real estate as well. And by investing in REITs, we don't actually need to worry about anything that I mentioned or dealing with tenants, knowing the local eviction laws, or lack thereof, because REITs are truly passive, and they're a special way to get access to real estate and have professionals do all the work for us. With Realty Income, for example, they own 12,400 commercial properties across the world, who all have long-term contractual lease agreements, meaning they're going to be collecting on those monthly rent checks one way or another. currently has over 1,200 customers, and their customers are in 84 different industries. The main ones being grocery stores, convenience stores, dollar stores, all the essential stores in case we need to start hoarding items again. Their main customers being Dollar General, Walgreens, 7-Eleven, Dollar Tree, which all lead the way at the most commonly robbed stores. We don't need to worry about Realty Income robbing from us though. They've rewarded shareholders quite well since their inception in 1994. They have a 15% compound annual return since then, and they have paid 634 consecutive months with a dividend. That's right, guys, they have paid dividends to shareholders every single month for 634 consecutive months. This is a company that I can sleep very well at night knowing that they have a high quality real estate portfolio which has a mind-boggling 99% occupancy rate. Its balance sheet is also very well supported with a high rating from two of the leading credit raters in Moody's and S&P Global. Is one of the largest REITs out there with a $40 billion market cap. And that might also be part of the reason that is actually down nearly 8% this year, despite all the fabulous stuff that I just mentioned about them. At a $40 billion market cap, it's going to become that much harder to continue growing at such a fast percentage rate and acquiring billions of dollars of real estate each year. That's not easy or cheap to do, especially in today's market. Also, the more different industries that gets involved in, the less likely they will be the experts in that particular field, and they may also deal with less high quality tenants. As the Fed continues to raise interest rates, that means the borrowing of money, which is the pinnacle of real estate investing, it just becomes that much harder and that much more expensive, which is going to eat into O's returns. Also doesn't have as juicy of a rent escalator as other REITs in its contracts, so with inflation around 5% these days, is only predicting a 1.25% same-store growth in the next year. Now, despite all the cons I just mentioned, it's not stopping me from buying more shares of Realty Income during this period, almost on a weekly basis. For me, this is a chance to get a fantastic blue chip company with a 5% starting yield and get paid every single month. I understand it probably has moderate growth on the horizon, but I'm willing to live with that. Has a moderate buy rating among 8 analysts and has a consensus price target of 71.5. Meaning it has potential for 22% upside from today's prices. I currently own 62.88 shares of and get paid just under $200 a year from them. It's slowly turning into its own rental property on the side that I don't need to do any work for. I also have drip set up on my dividends, so every single month I'm getting a pay raise from Another REIT that I absolutely love is VICI Properties, which owns more of a specialized portfolio of gaming, hospitality, and entertainment locations such as the Caesars, the MGM Grand, the Venetian, just to name a few. They own so much of that Las Vegas Strip. About 50% of their business is done in the Las Vegas metro area, and 50% is done elsewhere. So doing so much of their business in one area doesn't concern me, because Las Vegas got 39 million tourists last year, which is the 5th most of any US city. That's a lot of money people are going to be spending at VICI's 124 million square feet of properties that includes restaurants, bars, clubs, and sports books. It's pretty fitting that VICI's motto is invest in the experience. Well, that's great for the ordinary Joe, but we're all smart investors here. We want to know how we can make money from VICI and make money from people going to Vegas. VICI has a 100% portfolio occupancy rate on its 49 properties and its 4 golf courses. Yes, I couldn't forget about the fabulous golf courses with the greenest of grass. Just as green as the money that VICI sends its shareholders every quarter. Since they paid their first dividend in 2018, that dividend has grown from $1 to just under $1.60 a share. As VICI continues to acquire more properties and raise those rents, I expect that dividend to continue to climb. VICI, after all, grew its funds from operations numbers 73% in the last year, and total revenue was up 110%. It also has plans to continue to expand in Alberta, Canada, and has eyes set on even more expansion, which will almost certainly feature annual rent rate escalation clauses, which are tied to inflation. VICI has also provided some really nice capital appreciation these last 5 years, being up 54%. So imagine getting a 10% return from capital appreciation and a 5% starting yield. VICI is now trading well below its 200-day moving average of 32.69, nice, and is down 3.5% for the year. Both Realty Income and VICI operate using triple net leases, which means it's in their contractual agreements that the tenants are agreeing to not only pay for the monthly rent, but the ongoing expenses such as property taxes, building insurance, maintenance costs, just to name a few. A hidden benefit to this is that it's still the landlord that's able to deduct these expenses from their taxes. This could be an amazing time to buy this entertainment REIT, which has a buy rating from 8 out of 9 analysts, and its consensus price target is 20% higher than today's prices. I'm very bullish on the hotels and casinos that VICI owns the associated real estate with, which is why I currently own just under 69 nice shares for $107 in passive income each year. I can be 1,000 miles away from VICI's many entertainment options, but I can still earn money every time somebody shops there or spends some time in their facilities. I just dropped 2 gems in the dividend investing world. Make sure you subscribe for more future updates on great companies. Hit that like button for a small-time YouTuber. Catch my full 140,000 portfolio and support the channel via the Patreon. Join the Discord chat below. My videos are always found in podcast form under the Collect Cash podcast name, and I will collect cash you on the next one.